Good afternoon. I'm triple broadcasting. I'm hoping it works. Usually this breaks down Thinkorswim or the chats, but I'll try my best. So just to let you know what we're watching in the markets. Number one, I'm supposed to promote this. I stink at promoting, just to let you know. That's, bragging and promoting are not my strong suit. Uh, Even though I have people on the street corner offering free wine if they join the site. But no, all kidding aside, let me show you this because it's been pretty handy. So just to let you know, like I said, I stink at promoting, but there you go. Yeah, I did a premium class on this a while ago. So I'd say it's extremely difficult to find, but there it is. So on the artist short selling, and that doesn't mean to be a perma bear whatsoever. And it doesn't mean to bash other people that are bullish. I mean, it's a different tool in your arsenal, so to speak. So just keep that in mind in here, in there. Somebody asked a good question about Pepsi, by the way, in the YouTube live. And I got to tell you right now, I totally understand, looking for the bear flags, like I said. But when you look at Pepsi, the problem with that, darn right, that might be a bear flag, but you're against all this support right here. That makes it tough. But let's see if there was a time to play Pepsi on the downside. But I'll just show you what we're talking about because it's a great question on your part. So, number one, go to multiple time frames. That's what I do. So you go over here and you can go to six time frames. It really fits better with four. And that's no bargain. But let's just show you. The reason I show this is so we can get an idea where the support and resistance is. So now don't get annoyed at me, but that was your bear flag. That's tough. That's why in a bear market, it's really tough because these things have a habit of gapping on you. So you might say, well, wasn't that support? So yeah, sort of. But as you see, that's where it stopped. So that's only like a 1.5. I don't know if that's worth it. Now, on what you're correctly identifying, there are a couple of things about you being dead right. So what's one of them in here? One of them is it's workout. I like using a MACD on the bottom to time an entry. What are you going to notice? A lot of people say, well, it's when it's overbought, should you be shorting it? No, you got to determine the longer term trend. If you don't want to do a longer term trend, at least an hourly if you're going to day trade. So when I do day trades, I take an hourly, a 15, a 5, and let's say a 1 or a 2. I don't use a MACD on a 1. That's too whippy. So in here, what do you see? Well, on a daily, and I'll go to TradingView to show you. On a daily, I try to be as simple as possible. And so on a daily, I'll use a 50 moving average to determine if I'm in an uptrend or downtrend. That's it. So Pepsi, that's always the difficult part. The difficult part is the change of trend gets you frustrated. But in the grand scheme of things, an hourly bearish chart is a lot more reliable if it's decisively under the 50, like here. So definitely it matters on the trend. It doesn't mean you can't find them, but when you're in that decisive downtrend, it works better. Now, that being said, on what you were saying, like I said, on this, I use a 50. On an hourly, I'll use an ATR trailing stop, and I'll use a 20. And that's it. So then you go in, and I think you're going to be right in here. And Jessica, let me show you. So this is a great question on her part in the YouTube live room. Is this a bear flag? Well, now that I zoomed out, yeah, I see exactly what you're talking about. The problem is by the time it breaks where you're sure Is it worth that amount? Yeah, you could play a spread underneath, sure. The other thing you got going for you is that MACD. A lot of times when something breaks, what happens is you get too oversold. And then it comes down to it's up to how you work off the oversold condition. So just keep that in mind. So, and like I said, use a chart pattern to time your entry. So I just can't stress that enough. So if you're in an hourly bear, well, like the ES, and we'll go over that in a minute. So the Pepsi bearish pattern, no doubt. So bearish pattern. But the first thing you want to know is how to time the entry. And so like this. Number one, on the first sell-off, it's going to create an oversold condition. It's how it works it off. So when it works off an oversold condition, does it retain a bearish structure? Right here, when it worked it off, it didn't look like anything. This time it's getting overbought and it looks pretty bad. The only thing going for this stock today is relative strength. You know, maybe a flight into defensive stocks. But theoretically, you're right. You're dead right. But where do you initiate the short? Well, the problem with this stock, it has a habit of having overnight gaps. That's why I don't like trading Pepsi. Theoretically, if it was intraday, you shorted on the break. You shorted on that break. So now if you want to do some anticipation, the problem is you're probably going to have to do something under the market for next week. The problem is if the markets really crack like they are they really going to do a flight to quality? But in answer to your question, usually with this, when I see the break on an hourly or the daily for that matter, but you see that break you're talking about and you found it great. So in here. And I understand wanting to do it's not at support. I thought it was. Then I went to a different chart service, Pepsi, and sure enough, it's not at support. So if you want to establish a position on the downside, the first thing I do is look at the companion stock. Coke. So which one looks worse? So that's the first thing I do in here, Jessica. So I put them side by side. I'd first start with a daily chart and see if one of them is decisively broken. That's the first thing I do. Has it decisively broken? Well, you know this has. That broke a long time ago. That always gets tough. Is Coca-Cola going up because its business model is different? You know, it's eating their lunch, so to speak, or drinking it. So this is definitely underperformed. So what do you do? Well, I got to tell you, the problem with Coca-Cola, it doesn't move that much. But if this goes down, you got to think this is a better trade in this area. And the reason being, if you're wrong in here, it's probably going to gap to 152. If you're wrong in here, it's probably only going to 70. But here you go. There's your bear flag, and it stopped at support. There was a nice bear flag. But I got to tell you, on a daily chart, I got to think this is the one you play instead of Pepsi, even though Pepsi obviously has more of the relative weakness. And let me show you why. And I hope this is helping you. The key in here is in a big, to me, this is like a bear market. It's because a lot of indexes have already really broken down. So what we saw was this. When we saw the stuff about potential for Medicaid or the layoffs in the government, the first thing we thought is shorting retail, shorting the Walmarts, which worked perfect. Now, there's a method to my madness of why I'm bringing this up. So I just want you to know that. So you see that. Then you see the 200. You see it's approaching the 200. So this started going down. Our first priority, and a lot of people get this wrong, it was probably a better short there. In fact, we did short it there. We waited for that oversold rally back to the zero line to look for the reversal pattern short term. That's where we shorted it. We didn't short up here. Well, we sort of did. But when you short, you want to be able to have multiple points of contact. See those multiple points? Those multiple points of contact, but it was still in an uptrend. The ideal is to short it after the first oversold rally and look for that reversal candle on a shorter term time basis. Now, the reason I'm bringing that up is when that went down, you would think Capital One would go down, which it did. Now, there's a method to my madness, Jessica. I know it seems like I'm going off the track. I'm not meaning to. So when Capital One went down, because you're like, yeah, the consumer is going to have some problems in here, maybe higher delinquencies. So Walmart went down, Capital One went down. So American Express went down. And then you're like, why on earth is Visa staying up? Isn't that in the same group? That's why we shorted Visa. Visa was up here when American Express was down here. That's why a lot of times when I show moving averages, I don't show them as support. And I hope a number of you on Triple Broadcasting are noticing that I was adamant. I'm not adamant all the time. I try to be a little more, I try not to sound too like pound the table. But I did pound the table not to buy at the moving average. Do not buy at the moving average just because it's a moving average. How many places on Twitter mention that, yeah, you're hitting support, that's where you buy. Or you hit support, you're going to have a big snapback rally. If other indexes are plowing through it, why should this hold at it? All right, now getting back to the other thing. You go back to here, American Express on the left, getting pounded. Then you have Visa eventually doing it. MasterCard eventually doing it. But they're still above their 200. That's why we shorted MasterCard and Visa. We actually played MasterCard on a bounce, but ultimately I think they go to here. Now, the reason I'm bringing up this method of my madness is if Pepsi is doing this on the right and decisively breaking, which you know it is, then why shouldn't Coca-Cola do the same thing? That's why I went talking about the credit card companies. So if this is decisively breaking and it's under a number of moving averages, so over it, it's over the 50, it's over the 200. Why shouldn't it follow this? So that's the way I look at that, Jessica. So I'd rather play this. Now you might say, well, let me tell you the theory. You might say people are, still drinking everything, but it's perception. One day they're going to come out and say input costs are higher, and that's why they're going down. Is Hershey's going down? Yeah, input costs are going up. So Coca-Cola, why shouldn't it do the same? Remember, Starbucks held up until ironically, I was on Trader TV 2 weeks ago and Sean was talking about shorting it right here for that exact reason. Input costs and consumer slowdown. What else went down? Finally, McDonald's, input costs, consumer slowdown. So I would rather play Coca-Cola than Pepsi in answer to your question. Based on the thing like the MasterCards versus the American Expresses. The only problem, it doesn't move a lot. So just keep that in mind. But if I was playing it, I'd play Coca-Cola instead. Now, there is one thing, and I'm sure this is a kicker. Dividend. Is the dividend so big? It's 51 cents. So $2 a year. 51 times 4. 204. So it's yielding, it's yielding 5%. Yeah, that can be a problem. So $2, not 5%. It's yielding 3%. What's Pepsi yielding? Huge amount. $5. It's more expensive, but $5 is 3%. So this has a higher yield. And to me, they're eventually going to have the similar charts. Eventually. Not here. Yeah, that would have hurt. But now when everything's going down, I got to think you played Coca-Cola. So I hope that helps for you. So I really hope that helps in there. So now, that being said, that's one thing. So I would look at that. If you want to play Pepsi, because it's definitely broken down, the only problem is the yield. But yeah, I mean, obviously that's a broken down stock. But if I'm going to play Coca-Cola, now you drill down to a shorter term time frame. When you go to a shorter term time frame, you see the writing on the wall if it doesn't hold there. So then comes the theory. If this breaks here, is that going to break? Well, the last break it worked. Look at that. So if this breaks, you got to think that's going to break. The problem is, like I said, this doesn't have a lot of range. This could go down 8 points. So I would look at something slightly under the market in here. I'll give you for instance. So you don't have to do it whatsoever, but I'll give you a for instance. So, and like I said, I don't know how to analyze if one of them's more domestic, international. I'm just going on the correlated charts. That one's way under the moving averages and under the 200, and one's over it. That's an hourly. Way over, way under. So let's go into Coca-Cola. Oh, you're buying Pepsi. Yeah, well, I got another one. Yeah, I totally understand. But if you're going to buy on a yield, just keep in mind what happened to Verizon. Verizon is sort of my poster child for a stock that has a high dividend. And what happened to it back here? Why'd it go down? Because the yields went up. So just keep that in mind. It's a bet on bonds rallying. So if bonds go down, you'd rather go in a risk-free than a Verizon. But if you're going to play a Pepsi because of the yield, and the stock's acting fine today, I think that you do it in a buy right kind of way. So you go and buy stock and you sell like 20-day out calls against it. Now, one of these is going to include earnings, I'm sure. Let's see. And I hope it's what you want to hear. But if you're going to play this kind of thing, because keep in mind, I'll play all kinds of things. So like last year. So I don't really go into 401k stuff for people. But last year when the election happened, I put all my 401k in European ETFs. So not bad timing. So not bad. So, but getting back to it in here. So you go into Pepsi. What are the earnings? The earnings are going to be, well, just look at the volatility. Look at the implied volatility, 25. When does the volatility pop? That's usually when the earnings are. They're always around there, 26. But in my opinion, when the stock is up near support and you want to be in long term, why not go every 22 days and sell a 150 against it? So, and you'll collect the dividend. The only problem is, like I said, it's $5 a year. So let's just do it. I mean, so you got $5 a year. Like I said, I'm not just all about shorting. So just keep that in mind. You got $5 a year. Then for a year, just think about you're selling just out of the money. $3 every 22 days. Yeah, that's a lot per year. That's over $30 a year. So that's protecting you down to like 120. What's the risk? Well, the risk is you get it called away And I'm telling you, you buy at 148.60 and you sell this at $3 and you get called away, the return is huge. You can always go farther out and do the 155s and do them every 35 days. So, that's a buy right kind of idea on a high yield stock, relatively high yield. The only problem you have is it was high yield here too. So, now it's not as high. Now it's better because the yield's getting up there. So, but I just thought I'd show you that because a lot of people, think all I do is short. No, which isn't true at all. In fact, we played FedEx on the long side today. So I want to show you that. Next thing, you were asking about initiation. And I'll show you what we're talking about in here. TOL, TOL. Let me just know about that, about where. And like I said, SPX for a day trade. If I see the day trade, I'll show it. That's the biggest problem I see on other sites is they go and do something just because to do it, like their itchy trigger finger. So when we saw the Russell fall apart, you have to play the SPX to the downside. So even though there's a ton of bearishness out there, when you see this fall apart, because this is what held up the markets. When this got up at resistance and failed miserably, especially right here, you have to play the SPX to the downside. So you have to sell out of the money calls. Market's a little broken, but you always wonder when there's this much sentiment if you're going to get that gut-wrenching rally. So sometimes I just back away. There's a time and a place to play it to the downside and upside. So if I'm buying premium, I hardly ever buy premium. If I see a bull or bear flag, sure, I'll buy premium. But overall, that's a loser's game. If you're bearish on the S&P, you short an out of the money call credit spread. So what did I warn you a couple of days ago about playing this? I'll show you. It's really interesting. I warned 2 days ago about this. So there were a number of you that were interested in selling doing this. I have no idea why. If I have a defined pattern, I'm still going to play out of the money. So I'm using time to my advantage. Just keep in mind that I saw on Twitter somebody selling this at 11. It's in the money. So just keep in mind, you sell it at 11. You're down a lot of money, a ton of money. You're in a bear market. You're going against the grain. All right. Remember, I showed you the 5,500, 5,480. It was $5. You're dead wrong. It's gone down 60 points. How much are you down? You're down 75 cents? You're wrong literally 80 points and you're down 65 cents. That's how you use time to your advantage. If you're bullish, you're selling out of the money put spread. If you're bearish, you're selling out of the money call spread. You're using time to your advantage. So just keep that in mind. The other thing, when you sell a deep in the money put spread, really all you're doing is buying an out of the money call spread. Just keep that in mind. 1730. So just subtract the width, which is 20, from 1760. That's 240. What do you think the call spread is? It's 240. So let me just ask you, 80 points out of the 100 points out of the money with 1 day to go. Do you really want to pay $2? And a couple of days ago, this was a 9. It was $50 out of the money. It was 9. What happens is if the markets go up, You're in a bear market. You're going to hit a lot of resistance. This is why I told you to avoid buying up here until you see how it works off the overbought condition. Look at the resistance on the way up. So what happens is the momentum isn't going to be straight up because you have all those layers of resistance. If it does go up, the implied volatility is going to go down. So you have momentum against you, time against you, implied volatility against you. In a bear market, you don't buy out of the money call spreads. That's a gambler's game. Ask Sosnoff, of Tasty Works, and sold Thinkorswim for 600 million. So I was with him when he was concocted the idea of Thinkorswim. So he's not the best at direction. Just ask Tony Batista, who's always on Twitter and responds to me immediately, friends of mine. So he'll be the first to tell you that Tom's not the best at direction, and he's made the most money he's ever seen because he knows how to do premium. So just keep that in mind. So what do I do now? Well, number one, like I said, there's a bear flag. So you sell out of the money call premium. If I see a bull flag and it looks like it's clearing everything, you sell out of the money put premium. Right now, when you're near support, but there's so much negative sentiment, I just back away. I don't do a trade. If I did a trade, I key off the Russell and transports failing miserably, and I short the SPX or stocks that refuse to go up. So keep that in mind. Now, going back to companion stocks. So I got to go over this. And keep in mind that when I see the Russell going down, which you're seeing, and you're keying off the growth oriented because everybody's nervous about growth, then when you see the Russell start to not bounce, you're going to a short-term chart to initiate your short. So keep that in mind. You're using the Russell as your tell, and you're initiating an ES on the downside, either with a break of the ATR trailing stop, or my favorite is just chart patterns. So like I said, I go over this every day in the Chart Patterns Mastery. I am as much as I can in the Central Room and as much as I can in the Essentials Room. So just keep that in mind. And I did a class on the art of short selling on how to initiate these. What you're going to notice is the more lines you can connect, the more important. So if you see all these trend lines, they become more important. This trend line becomes extra important if correlated indexes are already falling apart. Now, the Russell led to the downside. If the Russell breaks down, which it did, then this is more likely to break. In fact, this broke down right here before this did. That's how you initiate a short. You don't buy. That's the hope stage. So I've watched more people watch the Russell get killed and go and buy SPY calls. I have no idea why. Yeah, maybe you get lucky. But the problem is now you have all this overhead supply. So it was a better buy if it was over 560, because then you have an air hold to those gaps. But the Russell wouldn't let it. So there is a time to buy that if you want to take a shot. But I don't see it at the moment. So that's number one. Number two in here, which you'll notice, at least this is how I look at it, is other correlated. So I just showed you Coca-Cola and Pepsi. I want to show you another. And let's go into Coca-Cola and try and show you an example of a trade. Now, keep in mind, we made money in Federal Express on the opening. How'd we make money? We watched that the theory was the transports would have to bounce. And if they did, it wouldn't be the airlines because of all the stuff going on with pre-announcement and layoffs and all that stuff. So it would have to be led by like a Federal Express. How do we play Federal Express? I did it right on live. Not a lot stick their neck out and post trades. I love posting trades. I love to humiliate myself in as many places as possible. But no, all kidding aside, this is what we showed. I showed it as it was happening. Diamond formation. See that? You buy on the break. Now, why did you get out? Because a diamond is a measuring formation. Because of two things. Number one, the overall market's still in a downtrend. Number two, you had an amazing amount of resistance. So you had to take your profits quick. So Jack and a number of you did that. You bought it here, you sold it here. You didn't look again. In fact, then it looked like a bearish idea. Now, why didn't I play that on the bear side? Because of the massive support in that area. We took our 3 points. I made 3 points right in front of everybody, 100 shares. Made the $300, haven't screwed around since. So just keep that in mind. So it was a decent chart pattern at that exact moment. That was it. So now getting back to correlated indexes, I want to show you this. We were talking about GNRC and we were talking about buying this for a hurricane play. I've showed this ad nauseum on StockTwits for years, that this has a habit of going up after the May earnings, after the May. Also, when it has a trend line breakup. Remember, you're seeing more people on other sites buying the SPY on the way down instead of buying it on the way up. Just keep that in mind. So you buy it on the way up. That way you're using, you're not as defensive. And so I don't know why everybody says the SPX is in correction territory. I've said that for 2 weeks. Just keep that in mind. Most of the people on TV that say that have never traded a lick in their life. Sorry if I sound cocky, but you got to stick your neck out. So the Russell, when the Russell's doing that, remember, everybody said the S&P was going to bounce there. So just keep in mind the Russell down here. The Russell is where it was in July. Where was the ES in July? Here. Why should it stop there? I know a lot of sites that said, oh, it's going to stop at the 200. If correlated indexes are blowing through it, why should it? So just keep that in mind. Also, on the way down, if the other indexes are refusing to rally, then support isn't going to work as well. You got to be extremely picky. Now, don't get me wrong. There could be tariff news and all that that's bullish, but most of the time you see this first. Whether it's a 1 minute, a 15 minute, you see an inverse head and shoulders. You don't buy at the bottom. You buy on the bull flag at the apex of that inverse head and shoulders, or like we call it, a Stewie pattern. Stewie pattern, bull flag. Now, you might say that's November, that's the election, that's a daily. Now go into here and put in a 2 minute chart. Inverse head and shoulders. Inverse head and shoulders. Even in a downtrend, inverse head and shoulders, you find these amazing little inverse head and shoulders. You don't have that yet. And everybody worries about buying the bottom. I wouldn't do that. I would buy the direction. So just keep that in mind. Now, next thing I got to show you. Eventually, and I posted this on StockTwits, like I said. Like I said, I'm proud. I mean, I've been with them almost since they started. So I have probably 10,000 posts. You're going to find that out of those 10,000, I probably have 20 that are brags over well over 10 years. I don't brag. I let my subscribers brag for me. So just keep in mind, I could brag all I want about making this on a trade. The key is to stay in a bull market with your profit and loss, not this. So we're not there to do that. You're here to consistently make. But this is what I showed right there. Showed a bounce soon. Expect a bounce, but I haven't had 3 reasons. But eventually, this, which is the ES, has a tendency to go to the 200 weekly if other indexes already have. It's healthy. Look at that. It's just that we've had a parabolic move up. It's healthy to go to the 200. That's 1,000 points lower. Well, now 700. So just keep that in the back of your mind. That doesn't mean today. In fact, I'll show you an example of 2023 of what an oversold rally looks like. So just keep that in mind. So that's what I'm watching. But I want to digress to correlated indexes in relation to GNRC. So we look to buy GNRC, the hurricane stock, but the problem is my favorite correlated stock to this is Home Depot, and Home Depot is crashing. Now, you might not say crash, but to me, if it's down 50 points in 5 days, that's a crash. So we couldn't buy it. So the next thing you want to know is, do they really correlate? So I was doing that on a different page for you. So just go and see this. I love doing research because I love doing this job. We're going to take off every study. We're going to take Home Depot. We're going to maximize this. And now we're going to compare it. Add study. Compare with. Custom symbol. GNRC. Then we're going to make it a little darker so it's easier to see. Because I need to have some long ideas because eventually we'll go up. But what do you notice in here? Yeah, when Home Depot goes up, GNRC goes up. When Home Depot goes down, GNRC doesn't rally much. Look at that. So there's no reason for me to be a hero in GNRC, even if I think historically it goes up in June. What do you notice, though? So does Home Depot. When they're in plummet mode, yeah, you might say here, well, GNRC went straight up. That's true. So if you want to go and do a spread for June, I understand. But it's extremely difficult because in the long run, they do indeed correlate. Really tough. You're going against the grain. So just keep that in mind. So if we do something in GNRC, it will be for June. So just keep that in mind. Now, don't get me wrong in here. I would love to see a rally. So, I mean, I like to play both sides of the market. Some of the most money I've made over 45 years is buying in a bear market because you get such quick snapback rallies. But this is what you're up against. So you were asking about Pepsi if it's a bear flag. Just keep in mind, even though it's hard to believe, these better hold or they're bear flags again. Holy cow, how is that possible? So I'll get a lot more bullish if these are invalidated. So invalidated usually means what you saw last week. You get a spike, you get an overbought sell-off that forms a bull flag. You don't have that yet. So keep that in mind. So the other thing, and so I'm not that bearish here, but I don't have enough triggers to buy yet. It's getting there. Don't get me wrong, but you're in the hope stage. In fact, go and do this. I would just go and have this on your list. SPX or SPY for that matter. Let's go to SPY. We're going to take this in a different way. Press the wrong button. Sorry. Remember, on the way down, implied volatility goes up. It just does. That's the way it works with puts and all that stuff. Okay, we're going to take the SPY. And you see where it is. Sure, it could rally. But I think what you should do is take the SPY on a 1-minute chart, and I would take an out of the money SPY call and see where it is if this rallies 3 points. Is it really going to go up that much? So, and I'll show you an example. Take the SPX today. So we know the SPX has had a little bounce. 13 points. 13 points. Go and look at the SPX for today. Go and look at the 560 call for the 5,600 call for today. Let's go and look at where it is. So we're going to go. I want to show you just an eye opener. I think it's an eye opener. So we're going to go to the 5,600 call. This is why selling premium is better. And you could do it as a call credit spread, I think, as a margin purposes. But go take these 5,600s. There. This has rallied 15 points. The 5,600s are almost on the low. Look at that. Almost on the low. Even though this has rallied 15 points. Now on the right, put the 5450 puts. Well, you can even put the 5480s. I like them about the same price. There you go. This is sold off that much. Sold off 40 points since 11 o'clock. These are the same spot. Can you believe that? This is sold off 40 points, and these are the same spot. Maybe a teeny bit higher. So what do you want to do? You want to sell premium if you're betting on direction. So I'm telling you right now, if this breaks up, darn right you want to sell the out of the money puts. So I bet you in an hour, if this is right here, these are going to be $1.50. And these are going to be $3 or lower. So, in fact, I'm just going to take this for it. Like I said, maybe you get a massive rally. But we're going to do it like this. All right. We're going to show you the SPX. This is right now at 12.12. The 5,600 call. And over here, well, I have the ATR trailing stop up, but you'll get the gist of it. So you got the call, you got the put. That's for today. I'm going to screenshot it for you. 54.51, 55.51. Now, keep in mind, if they do, get rid of, if they get rid of tariffs, yeah, maybe this changes. But let me show you. I can't put this in the other room, so here you go. Here's a screenshot. There's a screenshot. This is at 12:14, 55.41. These are $4. These are almost $3. Go and see in an hour if this hasn't moved a lot, where this is and where that is. So just keep that in mind. I think it's fascinating to watch this stuff. I love watching this. Doesn't mean I'm trading it. But just keep that in the back of your mind. Like I said, now, when would I get bullish? Does that chart make me bullish? No. What chart makes me bullish is the thing that made this go down in the first place starts going up. So if I saw this way up here, invalidating any bearish pattern, all the way up here, yeah, I'd get more bullish on that. But I don't see it. Transports crashing again. So I don't see any reason to buy the markets yet, unless you're in the hope stage and you think something's going to come out. And if that makes you happy, that's fine. So I would rather buy on the way up. So I'm just telling you, I've seen it over and over, and I know a lot of you didn't believe me on the way up, that 80% of the time you might make money, but in a downtrend, you're going to blow it all. So, I'll tell you, that's how I look at it. You got to identify that trend. Call fly, I don't see the things that made it go down going up yet. So why do a call fly? There's no reason to. I would rather buy anything as a spread above the market if the things that made it go down start showing relative strength, which I don't see yet. So just keep that in mind. Don't see it. In fact, you got to worry about this having another leg down. I would much rather buy a call fly or something above the market if the things that made it go down form a bullish pattern. Now, if you want to go and do a real cheap call fly when there's so much negative sentiment, I understand that. But first things first, I promise before we go to show you something bearish in Coca-Cola. Now, just to let you know, Jessica, in here, and I'll try to structure one, don't get me wrong. If you're going to do a bearish idea in Coca-Cola, you can't use calls because they have dividends. So let's say you want to play this under the market for next week. Well, number one, the expected move is so small, it's rough. But if you did, you got to do it like this. Something really cheap like this. Remember, I like taking advantage of vol being cheap. The vol is pretty cheap. So 96 cents, it has to go down to 69 just to break even. The problem is what happens if you're too right? What happens if it crashes? So you got to do it as an unbalanced. So an unbalanced means this wing is closer to the middle than that one. So what you're doing is you're buying a 3-point wide put debit spread and you're selling a 1-point wide to pay for it. It's almost the same price as the other one. If it goes to 60, 3 minus 1, it goes to 2. You double your money. If it goes to 71, you lose a point. But you do it in a bear market of the overall market. If you're doing put flies, you have to do it as broken wing. So, and, keep that in mind. You have to do it as a broken wing. So now, on the call side, let's say you want to play a 10th of the SPX, betting that this is going to hold somewhere. Well, the real place to hold is there. Number two, though, is look for the whoosh. Boy, I wish I had more time to show you. So what's the whoosh? Well, there are two types of whoosh. One of them is if the market's down 7% or whatever the collar is and it stops trading. It's only down 1%. This is a brutal sell-off because it's so slow. If you buy out of the money puts, you might lose money. That's why we were long a bunch of index put flies, which work fine. So usually a sign of a bottom is a big red candle and a green takes back half, and then the follow through the next day. Look at this poster child right here. Rally, a candle is 2 higher than prior. Same. So just keep that in mind. But I have a feeling it's going to look like this. You're going to get the Russell that's pulled down the market stabilize. And you're going to see this work off its oversold by going up to resistance up here and then the MACD getting overbought. It worked in 2023. Just keep in mind, overbought in an uptrend is not as reliable. Overbought in a downtrend is a beautiful thing. I'm using the 50 moving average. Overbought in a downtrend. You look for the reversal candle, which you got. So now, when you're in plummet mode like this, I usually just back away. But let's just say you're right about some kind of, I used to call it broken wing or unbalanced or anything. Let's say you want to play the upside. So how would you play it? Let's just say you want to play the upside, thinking we're going to have a strong bounce. The best way to do it is like this. Now, number one, I am not recommending this at all. I just want to share it because it was a good question. Something like that. 3 minus 1. If you're too right, it goes to $2. You double your money. If it crashes, you lose 84 cents. So GTNZ, there's an idea for you. Right there. Now, let's say you think it's going to go up tomorrow. You can always go and do this. Let's say they do a budget resolution and all that. I like doing things in the money. That's too expensive. The market cracks. I don't like that. 6 minus 2. So you'd like this half the maximum profit. That's one way to do it. How about for Monday? It's about the same price. But that kind of thing. So yeah, I mean, you're getting down to where it's not going to take a lot of positive news to goose things. But you don't have any goose potential yet. Now, if the transports were up or Bitcoin had a massive rally, well, that's different. I'd show you a lot of long ideas. Just keep in mind where Bitcoin can go. And by the way, there are a number of people on Twitter that when we were going up, were just bragging about their long ideas or, oh, bears are going to be wrong. There's a time and a place to play the bear side. Look at that. Tops take a long time to develop. Then you get that oversold rally to resistance. Remember, I just talked about that. And then you look for the trigger. You look for the bearish reversal, which we saw. In fact, Jack, that's how you came in and beat me in the that competition. Was shorting right there, I believe. That was a beauty. And I would open a paper trade account. You know, it's a good way to experiment or go and trade 3 shares of the SPY. Commissions are free. But where could Bitcoin go? Right to here. Path of least support. To me, there's your support. Massive support in that zone. But on the way down, because of animal spirits, sometimes you have a habit of overshooting. That could get you to here. Yeah, that would be ugly. Like I said in Tesla, what would hurt the most people would be if it went to fill the gap in this area. Well, it went to hurt the most people. So where would Bitcoin hurt the most people? Here. And the other danger with Bitcoin, you always ask about margin calls, which I don't believe that much in. I've seen many more margin calls on short squeezes than I've seen on the way down. Remember, this has gone down slowly. You're not going to get a lot of margin calls. But Bitcoin, there are a ton of different brokers where you can have 1 to 500 leverage. That's where you're going to see the margin call. You're going to see one day when this opens down 10,000 points. And that'll be the bottom. But it's not the bottom till you get the reversal candles. Yeah, but the point is in 2008, it was definitely you had to look for that reversal pattern. Almost every one of those you're talking about, Rick, in 2008, you got the reversal patterns, even if they were overnight. So, on the way down, just like here, almost every reversal has been like early in the morning. But I'm just telling you, that's what we're looking for. And chart patterns mastery, we've been watching the Russell versus Bitcoin. It's correlated beautifully, amazingly. So when this sold off, that sold off. So I don't see the divergence that's positive yet. Now, don't get me wrong. Maybe you get some miracle rally later. No doubt. But you'll see that if you take even last Friday, remember, and by the way, you see all the people on the internet that talk about that March 1st is strong and March 10th is strong. Go on the charts. Just go on the charts. What else do people say? You don't bottom on a Friday. Just keep in mind, last Friday, the market closed on it high. But I'll show you. So what happened on Friday? Take an hourly chart. Go to March 7th. Right? I don't remember where it is. Let's see. Right here. You got a massive rally, but you got the reversal and a bull flag right here. You got the reversal and the bull flag. That was Thursday, I think. So look for that reversal and bull flag. You don't have it yet. So that's all I'm telling you. So, like I said, though, if the first place I think you'll see margin calls is going to be in Bitcoin. So just keep that in mind. So because of the leverage factor. So now this has a habit of having the margin calls or panic overnight. And like I said, panic doesn't mean to buy. Panic means to look for the reversal candle. So, that's what I'm going to try to do. And I'm telling you, I'm fascinated in this too. I got to look at this again. I just showed you this and I'm dying to look again. So I just showed you this because I love looking at this. Now, keep in mind, the vol should be going up somewhat, but let's go to these charts. So on the left, remember the S&P is about where it was a couple of minutes ago, a little lower. All right, where are the 5,600 calls? Remember, they were 4. Where are the 5,600 calls now for today? Are there 3? Where are the 5,480 puts? There are 3. So just keep in mind that strangle was 4 and 3. It was 7. Nothing's really changed. And now it's 6. Maybe 7. Yeah, 690. Before it was 730. So just keep that in mind. Watch that today. You can even do this. Sell. I'm not doing it. I'm just showing you. You could save this order. Go and sell the 5,600 calls and sell the 5,480 puts. And look at this an hour from now. Just look at an hour. Now, obviously, if that's down 500, that's different. That's why I wouldn't do that. I'd do it as an iron condor. You got to do it with limited risk. But still, it's sort of cool to watch. And remember, I'm watching a lot of things, so my spelling is pretty pathetic. So look at this, 55.34. So when I look at a strangle, it depends on if I'm bullish or bearish. If I'm bearish, I'm going to have to put farther out. But just watch this in the next hour and see where it is. So take care, and thanks for listening. Thanks for the good questions, and I'll talk to you later.